Old Mutual has been running for 171 years. Started by a group of Cape Townians, Old Mutual started as a life assurance business. Over the years, the business has grown and evolved and is now a leading global financial institution.
When you have a listed company which has a number of subsidiaries in operating in different sectors, so in banking, Nedbank is a bank, and then in insurance, and then the UK wealth management, what happens is the stock market generally places a discount. So if you break it up into its various parts, then it's worth more than if it stays together.
It seems investors are pleased with the scenario. Old Mutual shares enjoyed solid gains on the day. There's speculation the group wants to divide itself into 4 standalone companies, separating its UK wealth business, its emerging market operations, its asset management business and the Nedbank Group, a concern for South Africa.
I don't think it means that Nedbank is necessarily for sale, because they need Nedbank at the moment to give them that earnings base that they need to recover.
But if Nedbank is to be unbundled, it may send a bad signal to the market.
What it would say, I think, is that there was a very low estimation of South African banks, and I don't think that's so. They're well run in a very difficult environment, they're well managed.
Old Mutual owns a majority 54% stake in Nedbank, which it had previously wanted to sell. With no success, the bank remained in the stable, but when leadership changed at the end of 2014, new CEO Bruce Hemphill announced that there would be a strategic review of the group.
It's good news for mutual shareholders, because let's face it, their results have not been startling. They've been pedestrian at best. They've made some terrible mistakes regarding structure over the last 10 years or so that they've been listed in London, and I think that maybe it needs a whole new broom to sweep out the old strategies and bring in some new ideas.
The introduction of more stringent UK regulations are making it difficult for large groups to run businesses across borders. Just a week ago, Barclays plc announced it was selling off its Africa operations, due in part to regulatory burdens.
They've also got another big push coming from regulation in the UK, Solvency II. With South Africa having exchange control, any additional capital that's held in the South African subsidiaries doesn't count towards capital at the holding company level because of exchange control in South Africa. So what it means is you get a very inefficient capital structure which could develop in Old Mutual if they don't look to try and change something, which would lower your returns as an investor.
Old Mutual will release results on Friday and provide further details on its future plans. Sumitra Naidu, CCTV, Johannesburg.